excited to learn about forecasting? Hey! So how many of you have experienced forecasting sales? No experience? Oh, 1, 2, 3. So anyone else who has experience in budgeting and forecasting? Okay, so a few of you. So today you're going to learn how to do budgeting and forecasting in a very simple way and in layman's term. Excited? Yes! Okay, so let's start. So the normal way of forecasting sales is usually by determining how much was your revenue last year, and then you add a percentage, like for example 10% or 10% for you to be able to get your revenue this year, okay, or the following years. Okay, but that's not what I'm going to teach you today, because that's easy, right? You just add a percentage and you get the amount. But what about if you want a figure that's not been achieved before? Okay, if you want something, or if you want a desired income which you really wanted to achieve, how much revenue would you like to get, or how much revenue do you need to achieve in order to achieve as well the desired profit that you have in mind? Okay, so that's what I'm going to teach you today. It's actually not just forecasting your sales, but determining also how you're going to achieve not just the sales, but your profits, your desired profits. Because even if you have so much sales, if it all goes to your expenses, nothing will be left for your company, right? Okay, so today we're going to discuss how you're going to achieve it and some techniques or some workarounds you can do in your company to play with the numbers. So let's start with sales. So let's say, for example, I'm selling this marker. Okay, so if I have a business and I'm selling this marker, for example, for 100 pesos, and I bought it for 60 pesos, okay, and then if I have a company, I have expenses, right? So let's say, for example, my expenses in every month, the fixed ones like the salary, the rentals, okay, the utilities, what else? Your office supplies. Let's say, for example, you have 100,000 to keep things simple. Okay, so I'll write this down to make things clear. So my sales, or that's what we call benta. Okay, sales is 100. And then your cost, this one is the one directly related to this marker. So that is 60. Oops. So that's 60. Okay. So with that, you will get what we call as the gross profit, or we call this the contribution margin, okay, which is 40. So why contribution margin instead of gross profit? Because sometimes there are costs that are direct. In this example, the costs that we have taken are just the direct costs. So the indirect costs and the fixed costs. Because sometimes you have fixed costs that are also part of your cost, especially if you are into service companies. But to make things simple, we just use the marker. Okay? So the contribution margin is 40. And if you want to know the percentage, how much is that? Just 40 divided by 100, you get 40%. Oops. So this is 40%. Easy, right? Okay. And in every month, how much again was the fixed cost? Our fixed expense? 100,000. So you have your fixed expenses of 100,000. Okay. So the first thing that you need to know is your break-even point. Okay. So in accounting, we call it break-even, or in simple terms, that is the point where you have zero profit, zero loss. Okay. Because when you know your break-even, you can play with the numbers already. So how much should be the break-even point? Okay. So, sounds strange, but it's very easy. So, you just divide your fixed cost by your contribution margin percentage, which is 40. So, to get your break-even point, okay, I'll just put there BEP, you get 100,000 divided by 40%. And you will get how much? 250,000. Okay? So what does that mean? Okay? So any sales below 250,000, you're losing money. Any sales above 250,000, you're earning. Okay? You're earning. So what should be the minimum sales? Okay? 250. But according to them, or the experts, according to the experts, we should at least have 10% buffer. Okay? So that means not just 40%. Okay? So you add additional 10%. So that means instead of 40%, it should be 30%. Tama ba? Because you have to have a buffer. So you treat your buffer like your expense also. Because sometimes we incur additional expenses. Sometimes the prices rise, right? So you treat it like your cost also. Okay? So you add to your cost the 10%. So it becomes 70. Tama ba? Okay? So 70 na siya. It will now become 30%. So if you add, the new break-even point will now be, okay, so the new break-even point, okay, so that's 100,000 divided by 30%, which is 333,000 or 3333. Okay. So 333,333. All right. So when you're going to put a sales quota or sales target to your sales team, make sure that it's not below 333,300. Otherwise, you're going to lose money, right? So anything below 333,000, you're losing money. Anything above, you are earning. Okay, so how do we play around with the numbers then? Okay, so the first thing is you dream of your desired profit, right? So we all have desired profits. So how much do you want to earn in a month? 500,000. So your fixed expense is 100,000. You add your desired profit. Desired profit. This is, for this example, let's look at the before tax amount. Okay, so it will not complicate things. Okay, so we will go far. If we cannot finish in 30 minutes if we go with tax. Okay, so 500,000. Okay, so how much is the total now? 600,000. Okay, and then what are we going to do next? We divide it again by 30%. So we will divide again by 30%. So how much now is your new sales target? 2 million? Okay, 2 million daw. Okay. All right? Did you learn? Okay. So now you need to achieve 2 million. But you're thinking, oh, 2 million is too big. Okay, I might not be able to hit it. So where will I find the 2 million in a month? Okay, so let's look at your numbers. One thing you can do is reduce your fixed expenses. Okay, when you reduce your fixed expenses, this will go down, right? Okay, another thing, okay, is you reduce your direct cost. Okay? What are your direct costs? Okay? The cost of your materials. Okay? If you are service, the manpower. Okay? So not necessarily you fire people, but you make them more productive, right? They can handle more clients, they can serve more customers, then they are more productive. When they are more productive, your cost will go down. Okay, what else? Okay. So, or you can actually play with the volume. Okay. So let's give an example. For example, you reduce your fixed cost. So instead of 100,000, it's now 70,000. Okay lang? Okay, so we have, instead of 600, it becomes, your desired profit still the same. So it's now 570,000 divided by 30%, you will get how much? 1.9 million. Okay? So, you have a lower amount of sales target to hit. So, it will not pressure your sales team so much. Diba? Okay? So, another thing, you can try to haggle with your suppliers. Okay? You try to, okay, you tell them, I'll give you volume, you bring down the cost. Okay? So you can do that also. So for example, you lowered the cost. Okay? So now, this 30%, let's say for example, it became you were able to save 20%. So that's, this 30% now became 50. Okay? So let's take a look at the effect. So still, so 600,000, because we did not change, 600,000 divided by the new contribution margin, and okay, so this is just 1.2 M. So you see the effect? So if you are going to rate the performance of your team based on these numbers, how will you do that? Okay? So your sales, the achievement of your sales target is the responsibility of your sales or marketing people, right? So if you achieve the sales target, they are doing their job, okay? So what about the cost? Whose responsibility is that? The direct cost. It's the responsibility of the purchasing and the operations personnel, okay? So if they can bring down the cost, okay, so you will earn. If they will bring up the cost, or there are a lot of rework, there are a lot of troubleshooting done with the clients, then the cost will go up, right? With that, you will not hit your target. So whose responsibility is the cost? Again, purchasing and operations. So what about the fixed expenses? Whose responsibility is that? All the other remaining functions in your company. So you have your HR, you have your finance, diba? So all the rest, okay? Research and development, okay? They are also included here. So they're going to contribute to bringing up or bringing down your expenses. Okay, so now you will know how to rate the performance of your team based on your financial reports, which is simple. And you also know how to play with your numbers. Okay, and you also know now how to forecast your sales. So are we learning?
Yes.
Yes. Okay. So I think I can leave the rest of the discussion for questions. So if you have some questions about this one, okay, did you find this easy?
Yes.
Okay, helpful? Yes. Okay, so now I'm ready to answer questions. Okay. Huh? You want more? Okay, so you can throw in some questions so I can discuss. Yes. Okay. So, yeah, because we have a lot of time. Yeah. Thank you. Very good. Okay. So, now if there are taxes involved, okay, very good question. Okay. So, let's go back to my figures. So, again, your sales is 100. Your cost is, what was the original? 60. Your fixed expenses is 100,000. And the desired profit is 500,000. Okay? So this 500,000 is gross, meaning the tax is not yet deducted. So if you want to deduct the tax, how will you do that? Okay? So just multiply your 500,000 by multiply. So if you want to take out the tax, because this one is gross, meaning the tax is included here. Okay? Okay, so since our tax, let's say for example, this is a corporation, so the tax is 30%. So meaning, okay, the tax is 30%. Okay, so this is 150,000, right? So this is your tax, and the remaining amount is your income after tax. So how much is the income after tax? Income after tax is 350,000. Now, if you're going to reverse the situation, okay, let's say, for example, you don't know how to compute tax, okay, but you want a desired profit net of tax. So let's change the figures to make it more exciting. Okay, so let's say you want 500,000. Okay, but the 500,000 is net of tax. So how will we do that? Okay, so remember in our computation here, this is 30%, this is 70%. But what you want now is 500,000. The new desired profit, okay, is 500,000 net of tax. Okay, so what we're going to do first is we still put the fixed cost. Okay, can I use another page? So fixed cost of 100,000 plus your 500,000 is net of tax. So that's 500,000, but you have to divide that first by 70%, okay, to get the whole amount. And then again, you divide that by your contribution margin of 50, okay, because we added 10%, tama ba? Or 30, sorry, that was 30, okay, so 30%, because we added a buffer of 10%. Okay? So how much? So 100,000. Well, how much is 500,000 divided by 70%? So that's 714,000. Okay? And then your 100,000 is your fixed cost divided by 30% or 0.3. So how much is the total? Okay? 2,000,000.713. Okay. So now, because you want a desired profit net of tax, this brings your revenue or the target revenue higher. Okay? So with this one, you can actually play. So if you want, I want desired part, I want net. I want to receive it every end of the month, 500,000, or I want it to be my savings in my bank, 500,000 every month, okay, net of all the expenses already, including taxes. So this is how you're going to compute. So nice question. Thank you. So any other questions, guys? Where do I teach? Yeah, I used to teach in Lyceum Santo Tomas and National Teachers College, but now, because I'm running my accounting firm, I'm no longer teaching in colleges, but we do have trainings. Yeah. Now, I have my MBA. I had it already before. No, I did not. I usually teach for the non-accountants because you're the ones who don't understand the numbers, because, you know, accountants, we teach numbers really hard. So for me, I want to keep it simple. So everybody will understand, right? Yes, I have. Flags. Later. Pagalitan na ako ni Joanna. Pwede nang ikat yun, no? Papagalitan ako. Nakakat na. Sorry. Yeah, so I'll give you details later. Any other questions? Yes, ma'am. Okay. Yeah. So, yeah, that's a nice question. So, what if you're not hitting your sales target? Okay. So, for me, it's a chance for you to revisit your strategies. Okay. If you're not hitting your sales target, because if you're not hitting your sales target, probably you are hitting the wrong market. For example, you're selling markers and you need 2.7 million sales. So, how many markers will that be? Okay. So probably you should not be doing the retail. You should be doing wholesale. Okay? So target those who are going to buy in bulk. Okay, what else? For example, you are into a food business and you are serving at 100 per plate. Then probably you are in the wrong market. You should probably be selling higher or higher amount or higher value or higher volume. Okay, so that's where you can play around. So you change your strategies first before you consider stopping your business. Yung fans.
6 months consistently on the losing end.
Yes. Yeah, I think you have to consider also your stretch in terms of capital. Yes, gano'ng kahaba yung PC natin. Because if it doesn't work for 1 month, 2 months, 3 months, and you continue doing the same thing, if it's already 3 months for me, it's time to change your strategy already. Okay, so yeah, 1 month probably because you're doing trial and error, it doesn't work immediately. 2 months, but if it's 3 months already and then it's still not working, you could probably change your strategies already. Okay, and try something else. You'll never know that one is the best strategy for you. Yes. So another question. Yeah, you have more time. Mm-hmm. Advertise. Okay. Okay. So the deciding factor here will be whether that additional expense that you're going to incur will actually cover the revenue that you're hitting, and at least it should be the amount of the revenue that you're getting should not be lower than the expense. So it's always cost benefit analysis. So how much cost will I spend for the activity that I'm going to spend and how much I'm going to get from it. So if the benefit is lower than the cost, then don't do it. But if you know and you are sure that the benefit will be higher, then do it. Okay, so that's just the main consideration. Okay, for as long as the benefit will always be higher, than spend. So what I've learned from the GBI actually, which surprised me, is that you spend 50% of your expenses in marketing. Okay, so for me, it's a surprise, but yes, you have to do it. Because if you want to really boost your sales, if you really want to grow your company, you have to spend on sales and marketing. Okay? Because that's where the revenue comes in. Okay? So, one more question before I wrap up. Yes, thank you.
How do you compute your, diba, if you're in a company, you have like the amount of people being there, diba, kasi for you to function well.
Mm-hmm. Yes.
So, paano mo
So how many people are you going to hire? Okay. So yes. So in the in one of my discussions actually in accounting for non-accountants, I always tell the students that they have to hit at least 10% income net. Okay? So that means if your income is between 10% to 15%, you can increase your fixed cost. You can increase your employees. You can increase your rentals, probably your space. So you can increase your fixed cost if it's between 10 to 15%. If it's going to be less than 10%, then don't hire first. Okay? Don't expand. Okay? So you have to focus on increasing your revenue first before you even think of hiring so many employees. Okay? But if your revenue or your net income is more than 15%, then you have to be careful because you are earning so much, the competitors are watching over you. So that means they're going to copy you or they're going to put a competitor that's directly going to compete against your company. Okay, so that's how, yes. So learning again? Yes. So any other question? Can I ask one more question? Okay, one more question pa daw. Yes, Sir Mon, do you have a question? No questions. Okay, so if you have no more questions, we can talk again in the future and can watch this video again and again so that you will memorize how you're going to compute it and compute it like you are the experts. Okay, so I leave you with 3 quotes. So my favorite one is from Henry Ford. So if you think you can or you think you can't, in either ways, you're right. Okay, and from John D. Rockefeller, which is one of my favorite business person. Okay, so from him, he said that if you want to move from good to great, you have to make that sacrifice. Okay, and one last from Mark Twain. Okay, so he said that the first step to getting ahead is to get started. Thank you very much.